I'm not going to try and compete in the name-dropping stakes, but I would just mention that the Gates in our name is actually Bill Gates' father, who was a partner in our Seattle office. And K&A Gates is a global law firm, and it is actually those rich West Coast hippies that sort of are one of the drivers behind our sustainability practice. Our participation in the 40% symposium is driven by our clients that are interested in sustainability, and also a core group of people within the firm that also get what it's all about. Some of my colleagues are here in the audience today: Stephen Cox, who covers real estate, Kieran, who covers construction, and Becca, that deals with due diligence, so feel free to chat with them. We heard this morning from Land Securities. They're actually our landlord at One New Change, so if you want to come and see their commitment to sustainability actually delivered as a real live working environment, we'd be very happy to show you around. Coming back to my talk, we heard from Land Securities this morning that for them it's all about designing ahead of legislation. And I would completely agree with that. There is some law around sustainability. There's a bit of carrots and sticks. And what I'm going to talk about today is a little bit about the legislative arrangements for energy efficiency. That's going to stray a little bit into sort of the trajectory of future legislation and the government position. Again, I'm not going to try and compete on political insight, but I thought it's worth just touching on what things might look like down the line. So these are the two documents that are current: Fixing the Foundations in July, all about creating a more prosperous nation, and specifically targeted on reforming the business energy efficiency tax landscape, issued in September 2015. The consultation actually closed on the 9th of November, and the outcome of this consultation is going to be incorporated in the 2016 budget. It's seeking evidence and sets out policy proposals to simplify and improve the effectiveness of the landscape in supporting the government's objectives around simplicity, productivity, security of supply, and decarbonisation. It's worth just noting, as you jump back, those two papers are both Treasury papers. They're not DEC papers. Here's the guy behind them, and this is what he's got to say about the consultation. Simpler and more stable environment for business, decarbonise cost effectively, security of supply and productivity, growth and competitiveness. What are the stated objectives of the reform? Well, fiscal consolidation, simplify and reduce compliance and administration costs, and certainly anyone that was involved in CRC compliance for a large and complicated organisation would have a lot to say about setup and administration costs, I think. Protect energy-intensive businesses at risk of carbon leakage. What this means is energy-intensive industries leaving the UK and that production and energy consumption being transferred to other countries. Obviously, the most current topical example of that is the more or less wholesale withdrawal of the UK steel industry to be replaced by imported steel from China. And the other stated objective is to support productivity through both improved incentives and carbon reduction. So this is the current regime and what's being reviewed for the purposes of reform. So under energy taxes and price signals, that's looking at climate change levy and carbon reduction commitment energy efficiency scheme. On the tax exemptions, reliefs from financial incentive side, it's climate change agreements, ECAs and EDR. And finally, the reporting and auditing schemes is where ESOS and greenhouse gas reporting comes in. So they're all being looked at. What's the government worried about? Well, they're worried about complexity. Understandably, all of those regimes have a large amount of legislation and guidance around them, and they are, by their nature, really quite difficult to get to grips with. Uncertainty as a disincentive to investment, that's been mentioned by several people before, but it's very hard to be certain that you're pursuing the right investment track if you don't know where the goalposts are going to be tomorrow, next week, next year, and so on. And that the government is concerned about the hierarchy currently directing investment to the production of renewable energy rather than energy efficiency, and their view that energy efficiency should be the first step, and we've just heard that from the preceding speaker, so it's a good job we're on the same page. Well, apparently the government's not actually concerned about reducing carbon emissions. That's not mentioned anywhere in the consultation paper. They're remarkably silent about compliance with European law, so it's very easy to be critical of ESOS. That hasn't actually been implemented particularly accurately in the UK, but because it's a European requirement, very little scope for the government to move that around. The polluter pays concept that historically has run through all of our environmental legislation is surprisingly absent. And whereas there is no focus on driving change at the SME level, it is mostly focused on large organisations. And so that will achieve a certain amount, but it's by no means targeted on the whole economy. And this is because the government is hoping that SMEs are going to be a driver of economic growth in the future and more likely regulated. This isn't intended to really be a sort of political comment, other than when I saw this chart at around about the election, I thought it was quite telling. So you can see the peak in the deficit. The reduction that's been achieved is what was achieved by the coalition government. That's broadly the equivalent of your bins, instead of being collected every week, being collected every 2 weeks. And then if you follow the dotted line down to where Gorgeous George says he's going to get the deficit, that gives you an idea of how much needs to be done. And that leads to statistics like 1/8 of the workforce at DEC being taken out of their capabilities to deliver solutions. And it's also very clear one of the government's problems with subsidies and incentives is they all have to be paid for. And I think you can see a real cutting off of the taps of government money for a number of initiatives pretty much across the board, and that's in the papers all the time at the moment. But that is just kind of gives you an indication of the scale of what government's dealing with. So what are the proposals? Well, the idea is to move to a single reporting framework for any one organisation. So depending on the size of your organisation and where you are, instead of this plethora of overlapping obligations that you'd be just working within one regime. There are stated plans to abolish CRC and roll that into CCL on the basis it's sort of simpler and easier. And the idea of incentives are mooted, but don't get too excited that there may be a load of new money, because it's quite clear that any incentives would have to be funded out of additional tax measures. The consultation paper is pretty open-minded as to how those sorts of incentives would work, but it's very clear they've got to offer value for money. And so I don't think we're going to see a lot of government money being poured into the sector. Sort of opinion, this is, I guess, my own personal take on the messages coming through the consultation. With so much that comes out of government, the devil is in the detail. In a lot of areas, the sort of law of unintended consequences seems to operate with government at the moment, particularly in planning and a number of other areas that I work in. What the government says it's going to do and what the actual legislation says when it comes forward are often not quite the same thing, and we've seen a number of examples of that being a problem. If CRC is going to go, okay, it is unloved, but it seems to me a bit of a missed opportunity given that all of that infrastructure was built and everyone was set up to initially comply with it. There were some quite appealing concepts around sort of league tables and rebates for high performers that were originally built into the system that maybe could have done more, but it sounds like that's likely to go. Greenhouse gas reporting seems to me to be a very limited scope and doesn't really have any teeth, so I'm not sure that achieves very much. There are lots of problems with ESOS, which I'm not going to go into now, but suffice to say that even if you wanted to comply, you probably aren't going to be able to find an assessor that's able to help you. There just isn't enough capacity in the market. It doesn't really have any teeth. Okay, a report is going to be produced, but as the speaker from the BRE said, they're just used as doorstops. Nothing actually happens. So I'm not sure that's going to deliver the intended outcomes there. There's nothing really intended to be tailored to the real estate industry. When CRC was being developed, it seemed to me it was very much focused on manufacturing corporations and didn't really get to grips with how real estate is owned and operated and how occupiers work in a number of sectors in the UK, and I think that is an omission, but that's perhaps down to the real estate industry not really engaging and explaining its position. And then there isn't a consistency of approach within the real estate industry in terms of green building initiatives. I'm obliged to plug EcoPass because K&L Gates alongside CBRE are the sponsors of the initiative there, but I think it's probably fair to say that Gresby has got more traction in the marketplace. But of course, with IPD joining with MSCI, actually the EcoPass has better access to financial performance information. So maybe if the financial performance and the green measurement could be brought together in one place, that would perhaps deliver better outcomes for industry. You know, in reality, the sticks in terms of energy taxes are not the main driver towards sustainability. As we've heard from the other speakers, a lot of this is about doing what you believe to be right and know in the long term to be right, and there are still real challenges over in cash terms proving that what you think you want to do is going to pay you back. There is something about license to operate and compliance with the law, and yes, there are penalties for failing to comply with this environmental legislation, but I don't think, you know, environmental legislation will be the main driver over delivering energy efficiency. But you need to keep an eye on these changes to make sure that there at least compliance is achieved. Whether or not it's going to deliver the overall outcomes that we're looking for remains to be seen. I'm very happy to answer questions, and I've included there a link to our Sustainable Development Practice pages if you want to know anything else about K&L Gates' involvement with sustainable real estate. Thank you very much.